Hello, welcome back to our Commodity Spotlight series. Today we're going to be focusing on platinum. Now, you may be asking yourself, why start in the metal space with platinum? Why not go with gold? Why not go with silver? Why not go with copper? One of the primary reasons is that I feel that this is a metal that gets glossed over many times. A lot of people don't really know too much about platinum. They know about it obviously through cars and through jewelry, but they don't really know much about trading it. So I thought this would be a good place to start in the metal space to just get a little bit of familiarity with some of the other less popular metals from a trading perspective. There aren't a lot of ETFs on platinum. Obviously, gold and copper and silver have a lot of ETFs associated with them where platinum doesn't. So this would be a good place to start just to get an introduction into platinum. This is a beginner's guide. It's not meant to be overly in depth. It's really just to get you familiar with it, to understand it, and to possibly explore it and see if it's something you want to start trading later on down the road in your journey. So let's get started. So what are platinum futures? Platinum futures are standardized contracts that obligate the buyer to purchase and the seller to deliver a specific amount of platinum at a predetermined price on a future date. Unlike buying physical platinum, futures allow you to speculate on price movements without owning the metal. They are a physically delivered contract. It's very important to understand that. They trade on the NYMEX, which stands for the New York Mercantile Exchange, which is now part of CME Group. The ticker symbol is PL. The contract size is 50 troy ounces per contract. It trades in 10-cent increments. Every dollar move is equal to $50. It's $5 per tick, 10 ticks in the dollar. Its trading hours are 6 p.m. to 5 p.m. Eastern Time. That's Globex. RTH, which is the most liquid, is 8:20 in the morning to 1:05 p.m. Eastern Standard Time. Settlement is at 1:05 p.m. So why don't I bring this up? The reason why I brought this up is because even though Globex goes from 6 p.m. to 5 p.m. Eastern Time, settlement of the contract is at 1:05 p.m. Why trade platinum futures? Right? That'd be a good question. Number one, leverage. You control large amounts of platinum with relatively small capital. Liquidity. They're easy to enter position-wise. Price discovery is transparent. Obviously, hedging. You can protect against price volatility for businesses. Speculation. Profit from price movements in both directions, long or short. However, remember this. Leverage amplifies profits and it amplifies losses. So you could be doing well on the upside because of leverage, but obviously leverage works as a double-edged sword and you can get hurt on the downside as well. Some factors that affect the price. So number one, you have supply factors. South Africa produces about 70% of the world's platinum. Russia is the second largest producer. Mining disruptions significantly impact prices. So why do I bring this up? If there's issues in South Africa and Russia, that could drastically affect supply, which could drastically affect price. And obviously mining disruptions is pretty self-explanatory. Who actually uses platinum? Some of the demand factors that are involved there. So obviously we have the automotive industry, which is pretty much a large chunk of the demand for platinum is used in catalytic converters is about 40% of the demand, roughly. The jewelry industry is about 30% of demand. Industrial applications are about 20%, and investment demand is about 10%. It's important to understand that the white metals, meaning silver, platinum, palladium, etc., are industrial metals. Even though they're technically under the precious category, they are industrial metals. Economic indicators that you need to watch. And this is where it gets a little bit tricky. Because a large portion of platinum demand is in the auto industry, paying attention to auto sale data is very important because it really will affect demand. Obviously, industrial production, mining strikes or disruptions, that's more political. You really have to pay attention to that, as well as currency fluctuations. The currencies that you really need to watch when it comes to platinum is obviously the US dollar, as well as the South African rand. That is the ZAR, the South African rand. Some of the seasonal patterns that you get are Obviously, jewelry demand before holidays. Auto production affects demand. So the cycle of auto production, usually you could see when production in the auto industry is slowing down, you can see situations where price will level off or slow down. Summer months often see lower volatility. Year-end positioning can create opportunities. So let's talk about the seasonal aspect of it. Obviously, coming into the holiday season, November, December, there's going to be demand for jewelry. So because of that reason, you could see price spikes going into the end of the year. In the summer, you get a little bit of a lull because there's really not much going on. Obviously, February, you get Valentine's Day, so you have a little bit more of a pickup from a jewelry perspective. So these are just some of the factors that could affect it, but not always, but just some factors that can affect it. So that was a little bit of a small taste of the fundamental backdrop of the metal. Not so much fundamental, but more of a introduction to what moves the metal around. Something to keep in mind. We're going to get to it when we get to a little bit more of the technical. Just something I wanted to bring up was platinum in general is, I wouldn't say it's wide and sweepy. It's not, but it is, from a spread perspective, a little bit on the wider side. It can get open, meaning you could get anywhere from 2 to 3 ticks to 5 to 6 ticks. So if you have a stop in place, you should expect that your stop is going to get jumped. So if your stop is, let's say, you're looking to get in at 1350 and you have a stop at 1345.20, you may get filled at 1344.5. So just something to keep in mind from the spread perspective. When it moves and it gets going, it moves. However, when it's dead, it's very treacherous because, again, because of that spread, the spread widens out and it gets very hard to control risk in it. When it does get going, it's not a metal that you would fight. I would say from a commodity perspective, it's not a commodity you would fight. So if you have short on the brain for whatever reason, and the market for that day starts going, this is not something you can get in front of because it will, when it rips, it really rips and it can have big moves and you might not get out of it. So it's not a reversion style metal, at least not intraday. So it's just something to keep in mind. If that's your style, you'd have to be more directional biased with this, at least intraday, obviously bigger picture as well, but intraday, once it gets going on a direction, it usually just keeps going. So it's just something to keep in mind. Let's get to some of the technicals. Okay, so we have up here an RTH daily chart just to give trend and give an idea of what's been happening with it. Obviously, we talk about it every week in Commodity Corner, but since we're talking specifically about platinum, we're just going to be platinum specific. So as I was mentioning before, as you can see, when it gets going, it goes and it trends really well when it does get going. However, when it doesn't get going, it's choppy and sloppy. It's pretty much a disaster. You can get like tops out of a range that'll be like amazing for one day, and then it just falls back in. So when it's range bound, it's best to avoid. When it does get going, it's very easy. I would say it's one of those metals. It's even one of those commodities that once it picks a direction, even intraday, and it wants to go that direction, it'll just keep going. And you could pretty much get in with very little P, no pullbacks, nothing. It'll just keep going until it decides it wants to stop. Okay, so you could see, obviously you had this breakout that happened going back early May. Early May is when it really took off, pretty obvious. There were some fundamental stories behind this. There was some Chinese buying that was happening ahead of tariffs. People were trying to hoard platinum, so it was very obvious that this was happening over here. Calmed down, found a home. It's to a large extent attracted to this 1350 area, and it's just basically hovering over here. So right now it's not as in play as it once was. When it was here, it was pretty much all day money, pretty much every day. That's how easy it was. Because again, when it gets going, it's one of those things that once it picks a direction, I know I've said this a couple of times, but I just want to drive that home. It's almost like natural gas in that regard, that when it picks a direction that it wants to go, it's just going to keep going in that direction. So it's best just not to fight it, just stay away from it. If the direction that it's going is not the direction that you want, it's not a reversion play. I know I've said that a couple of times, but I want to make sure that I drive that home, especially for beginners who a lot of times are thinking that how high can it go or how much lower can it go, and it just keeps going. Platinum has that characteristic where it just can keep going. This was just a brief tutorial, a beginner's guide to get you familiar with platinum, understand a little bit of its characteristics, possibly pique interest that maybe you want to explore this metal and you want to explore treating it. One thing I do want to point out is there is no micro in this metal. So what is what you get? You'll have to speak to your broker about margin requirements, but something to keep in mind, every dollar is equal to $50. It's $5 a tick. It moves just like gold in terms of the pricing. It's the same thing. So it goes 1350, spot 0, 1350, spot 1, spot 2, spot 3, etc., etc. And it's the same exact calculation, except instead of being $10 a tick, it's $5 a tick. Thanks for watching, and we'll see you on the next one.